Okay. Girl, you've arrived.
All right. Well, welcome to today's episode of Fem Finance. This is a new
There we go.
segment.
It's a new segment.
This is a new segment here at the Techno Analyst. Yes, today we're going to talk about portfolio diversification. So, in order for you to come up with your own personalized diversification plan, I think you need to know two things first.
Okay, what are those two things?
I think that first,
Is it only two?
well, to get started, it's only
Okay.
two. It's only
Okay.
two. You
All
have to
right.
know, what are your goals?
Okay.
What are your trading goals?
Money. Want to make money.
And
Be more specific.
what's your risk tolerance?
I like a lot of risk.
Okay.
I like to just chew on my nails and just go white knuckle, just terrified.
Cool. Because there are a lot of people who are in that headspace, and like I said, it's very personalized.
Mm-hmm.
So you have somebody like her, and then you have somebody at a different extreme, somebody who wants to save for retirement and is very risk averse. So their diversification strategies would look very different.
Yes, they would. And you have to come up with that on your own. You can choose to pay somebody to, be your financial advisor and make all of these moves for you and act as a fiduciary in your best interest for your wallet, I'm talking. But if you get a third party involved, they're going to ask you from the get-go and give you a series of questions on a questionnaire, more than likely, that will assess, what your risk tolerance is. So, are you looking for some safety and security for when you're a little old lady and you want to make sure that your portfolio is at a certain level? Or, are you just willing to just spray and pray, in the meantime, like yours truly? So you don't have to involve a third party to ask you those hard-hitting questions of, where do you fall on the spectrum, the continuum of risk tolerance, low to high, and everything in between.
Right. Because once you know that, then that'll help you to determine your strategy. And once again, strategy is very personalized to your own goals and your risk tolerance.
We have been, I think, as long-running friends and trading friends, but diametrically opposed in our strategies. Successful, albeit in our own ways, for sure.
Right. So since you're here and you're watching this, you found the techno analyst. So I am a technical analysis type person. So that's my thing. I'm like strictly charts and graphs and stuff like that. And that comes from, I started in the Forex market, which is, money. It's like the US dollar versus the Japanese yen,
Yeah.
something like that.
I knew you were going to say the
So
yen.
so it's just a bunch of numbers, and you got fundamentals, which Anita Michelle here is like queen of fundamental analysis.
I would imagine I am, because I don't use per se all of your boring charts and tools. And now the bots, though, interest me. As far as diversifying, I need to work on bottage.
Right. We were talking about diversification, and
Well, what does that look like?
right, what does it look like? You want to give us an example of what your diversification would look like in your portfolio?
Well, here we go. Let's just take an actual Robinhood portfolio. And I won't show you because It's none of your business. It's my business. But let's say you can do stocks, you can do ETFs, you can do crypto, you can do options, and let's say outside of this particular platform, you can have REITs. Yes,
Real estate investment trust. That's what it is.
exactly.
Right
Real
there.
estate investment trusts. And so within those, you can have different specializations. Within your ETFs, which are your exchange traded funds, you can have different sectors and you can specialize. You can focus on growth and value ETFs. I like the other category. That's my favorite. It's a very lucrative category. Sector ETFs, real estate ETFs, bond ETFs, regional ETFs, size-based ETFs, commodities ETFs, currency ETFs. So that would be an example of how I would have mine diversified. And then you can spread your percentage of, let's say, 100% of your portfolio, obviously, and how your monies are spread across. Like for me, I've always had, let's say, 50-50 stocks and crypto in my portfolio, pretty much. I started off that way, and then it's pretty much morphed into like a 33, where I have like other. A third of it is like other.
Right.
And now, a third of it is stocks and ETFs, and a third of it would be, crypto. So you can do it, anybody can do it however they want to do it. And it doesn't matter your dollar amount. You can split up $100. You can split up a turd, in thirds. It doesn't matter, however much money you're putting in there into whatever buckets, which is what I like to call them, just buckets, investment buckets.
Right. So that's the way she's doing hers, or that's her broad diversification strategy.
Yes.
You can get even more specific and say for your stock strategy, you can have it so that, okay, I'm going to have because if I have maybe a medium risk tolerance,
Mm-hmm.
I would maybe have 50% in large caps,
Yes.
And then I might have
25 and 25, or
Yeah.
you usually adjust that. And if you have like a financial advisor, and you can go online and adjust your percentage, if any viewer is familiar with that, you could do that on your own without,
Right.
Without having to have that third party mediator.
right, so if I maybe have a IRA
Okay.
and it's self-directed,
Mm-hmm.
you know.
Individual retirement account.
Right, individual retirement
Yes.
account, self-directed, which means that I'm in control of what type of investments I make with that money.
Yes, because you're more coming from a 1099 kind of perspective where
Right.
you have control over it and your employer doesn't.
Well, I am my employer.
Exactly. So for me and for a lot of the workforce, we have an employer that is, matching us, or, a certain percent, and they, in a sense, have their hand in that pot
Right,
because there's a middleman that they're involved in.
right. But after you leave that employer, then it's possible for you to roll that money into an IRA.
Yes.
And then you can self-direct that money anywhere you want. You could even put it into real estate investments.
Yes, or Roth IRA or something like that,
Right.
traditional IRA, whatever.
Right.
There are different options there.
Right. And with a Roth IRA, you pay the taxes up front so that you don't have to pay the taxes on the back end.
Yeah, and that's a good way to use a very small part of your overall earnings, each year, but that would be a wise thing to do. You're very limited, you know, as far as with the amount that you can conceal and kind of, whoosh, you know,
Yeah.
shield, because you are essentially shielding, but, you know, in your Roth IRA yearly.
Yes, yeah, I think it's up to like 17,000 or something like that you could put into your Roth IRA, and then, but if you think about that, if you have that money and you're the investor, you know,
Yes.
you can use that money and you can grow that money. So I may have only put in, you know, $10,000. So like I
Yes.
said, you only put in $10,000.
Yes.
But you traded like say up to $100,000.
Yeah.
Right? Okay. So then say I don't want to take the tax penalty,
Yes.
you know, and I just want to leave it in there.
Right.
Say I can parlay that and turn around and buy buy a rental property.
Yes.
Okay.
Yes.
So buy a rental property, and then that monthly rent will go back into that IRA, providing you with more money for your retirement. So these are all options, and that's another example of a diversified portfolio.
Yes. Yes. That's a great way to use what's already there for you. You know, if you have it set up, they have to work in concert with each other. And so
Right.
what a lot of people need to understand is how to, once they get more skills in the different investment world, they need to understand how to marry them all together and make them all work together to maximize your yield.
So I hope that you have enjoyed this segment today. I'm looking forward to hearing more feedback, your feedback from you, and make sure that you like and subscribe.
You could hit notification bells or whatever.